Dollar index and Nifty witnessed an inverse relationship, but recently we saw this correlation breaking. Now, going forward, what kind of expectation can investors hold? Is the worst over for the benchmark indices? Kunal Bothra discuss all of this and more with Nikunj Dalmia.
The dollar index it's not been able to scale past about the 110 mark, and I think there is this classical anti-correlation, negative correlation, inverse correlation, whatever we call it, between dollar index and Nifty charts, where if dollar index moves up higher, there comes a point where the Nifty starts to get back into a corrective phase. And there have been multiple instances over the last many years, many decades, that when dollar index starts to retrace, that actually forms a bottom for the index. But so far, as you can see in the chart also, in the last 2 months or so, specifically end of December, start of January, is that this correlation seems to be, or this negative correlation has been broken, where the dollar index has also fallen from 110 to now sub 107 mark, but the Nifty has also corrected.
So should we pay importance to the weakness in dollar, or this time it will baffle us?
Yeah, I think it's baffling. So there happens to be a zone where many correlations, they go out of the usual curve standard basis. I think we are into that phase where the correlation is actually going into a bit of a different kind of a scenario right now. But whenever there comes a point where one of the asset class comes into a very steep kind of a corrective mode, say for example, hypothetically, if the dollar index starts to fall, and if the fall starts to get a lot more exaggerated from here, and say if we scale below the 105 mark, that could really be a shot in the arm for the Nifty from here on. So I think what we need to see is aggressive sell-off which starts to happen in the dollar index. That could be a catalyst for the index to start to get back into a turnaround.
So we all thought that okay, dollar index comes down, FI will come back. That is not happening.
That's not happening.
So can we say that don't bet on the dollar index for judging FI to come back?
Yeah, as of now that correlation is broken. So maybe that's not the right way to look at the assumption that if the dollar index starts to fall, the FIs will come back.
Okay. Morgan Stanley and Citi are of the view that the worst is behind us. While you cannot time the market bottom perfectly, it's time to start buying. What are charts telling you?
So there are 2 points over here, Nikunj. One, 22,800 mark, we were discussing that's a very important support point for the Nifty. 4 tests in the last 1 month, and apparently all those 4 times we've managed to just about protect this 22,800 levels. The second aspect is also very interesting. When we did a market breadth analysis, generally we see that 95% when stocks, 95% of the stocks in the mid caps and small cap indices, when they fall below their 20, 50, 100 moving averages, that comes to be a point where the markets are extremely oversold. We are almost at 92% on the stock specific front or the market breadth front. So maybe another few days of the selling, and that's where I would probably believe that we could probably make a near term bottom at least.